Now, let's say you have just about $10,000 and you want to start investing. By the way, you don't need that much money. But what exactly would you put your money into as far as stocks, okay? What stock would you actually pick that you know is going to make you a good amount of money? That's the question I was facing back in 2015, 2016, when I had $10,000 that I saved up for the second time. And now I was basically looking at, hey, I don't want to waste this money like the first time. I actually want to invest it, okay? So what exactly can I invest my money into where I feel like that is gonna make me a lot of money? Now, back then, I made a lot of mistakes. I actually picked 5 investments, okay? 2 of those investments, the companies no longer exist. One of those investments is doing very poorly. Another one is basically just like complete garbage. And one of them is actually doing pretty good. But even if I left my money in that one investment that did pretty good, I wouldn't make as much money as I would today if I knew what I know today, okay? So in this video, I'm gonna tell you the mistakes I made and also what I would have invested my money into. And in the end, I'll also tell you exactly how much money I have right now invested in one of my accounts and exactly how much money that's going to be going forward, okay? So let's get right into this video and do me a favor and smash the like button. Now, the very first thing, guys, is that early on, I made a massive mistake. My whole goal was I want to make as much money as possible, which, by the way, seems to be the goal of every single beginner when it comes to the stock market, right? You just want to make a lot of money. And my whole plan or idea was I want to buy the next Apple or the next Tesla. I want to buy the company that if I buy today, in a few months, I'm going to be rich or whatever, okay? And my strategy was basically, what price did this stock used to be back in the day? What price is it now? If it's lower, I'm gonna buy it now and hopefully the price goes up. What I call this is basically speculation 101. It's basically buying stocks like they're just, for example, imaginary tickers on a screen. The price goes up, the price goes down, and that's basically it. The truth is, no, stocks are businesses. Businesses have employees, customers, sales, products, competition, money, assets, liabilities. There is a lot of things when it comes to a business, a lot of complexities. And what you want to do is basically assess the business as a whole to find out exactly what the value is. And I was not interested in any of those things, okay? So when I invested my money into those businesses, guess what? Things did not go that well. Now, here's what I learned today that I wish I was worried about back then. What was going to make me rich was not going to be picking stocks. What was going to make me rich was basically what I call, and what everybody calls, not just me, I'm talking like I invented this stuff, okay? But it's basically compound interest. I mean, that is the gravy when it comes to investing. That's what you actually want to be worried about the most. So here's an idea. What do you think would happen if I had just grabbed my $10,000 and basically invested it and basically forgot about it for the next 40 years? Let's say again, I'm 20 years old, I have $10,000, I invest that money and I just sit on it for 40 years. When I turn 60 years old, how much money am I gonna have there at a 10% return every single year again, okay? 10% doesn't seem like that much money, right? If I invest $100, that year I made, for example, $10. Next year, I make $11 and so on and so on and so on. But it doesn't feel like you're actually making millions, you know, like all those people do when you're actually searching up this topic, okay? But the amount of money I would have is right here. This right here is a compound interest calculator. I would always use this. It would be so much fun to kind of calculate, if I invest this much, how much am I gonna have, for example, in the next few years or whatever. So let's say all I have is just $10,000. And I just want to invest this money one time and never worried about it again. So I'm not investing any more money. I'm gonna be investing it for the next 40 years and I'm gonna be making about 10%. Guess what? In those 40 years, I'm gonna have, for example, about $452,000. That is 45.2 times more money than I actually put into it. You see, the goal, at least for me at the time, was I want to make money overnight. But the key was just, Tommy, just invest money and let your money work for you and don't interrupt it. Just let compound interest do what compound interest has to do, okay? And that would have basically set me off. That would have been awesome. And by the way, This is basically like a simple calculator where you're doing 10%, but this money, if I just grab that 10K and put it into that one investment, I'm gonna tell you later, well, it would have made me a lot more than this, okay? Now, the second thing that I wish I wouldn't have done was basically waited so long to basically make my first investment. The idea was I'm gonna save 10,000 and then I'm gonna start investing. That actually makes no sense, okay? If you know exactly what you want to invest your money into, it doesn't make sense to actually just wait until you have a big sum, okay? You could always just start investing with what you have and invest that over time. So what I wish I would have done was basically saying, instead of having like 10K, finally got there in 6 months, I wish I would have just basically invested, and continue invested for the long run. Now, this is basically something called dollar cost average, okay? That's what basically happens when you actually just buy consistently the same amount of money over a long period of time consistently. That's the whole idea, okay? What happens is this, okay? Number one, usually you average out the price. This way you don't have to worry about time in the market, because you can't actually do that. I can't do that. Pretty much no one can do that, okay? You can't time the lows, you can't time the highs. So when you're just always buying, you basically get the average price and you don't have to worry about really like overpaying. And on top of that, you don't need a lot of money, because again, if you let compound interest work, and you also stay consistent, well, you're going to have a lot of money. Now, just for fun here, guys, okay, what do you think would happen if instead of me waiting to save up $10,000, I would have just said, you know what, I'm going to invest $200 every single month for the next like 40 years, okay? What would actually happen, okay? Well, let's go into the calculator and actually run those numbers. The answer is this, okay? So again, I'm not going to be investing any like large sum of money. I'm just going to be investing $200 every single month for the next like 40 years. So 200 times 12 is $2,400 a year, if I'm not mistaken. And then you have 40 years at the same 10%. The answer is, in 40 years, instead of having $452,000, well, I would have just about $1.1 million. And by the way, you also have to understand you are putting in a lot more money, right? That's very true, because again, 40 years is you basically investing $200 about 480 times. It basically means you put in about $96,000 and you got out about $1.1 million. Now, is that good? The answer is, of course it is, okay? It's a lot of money. It's great stuff. And if you ask me how would I go about it, the answer would probably, I would put that money in a Roth IRA. That way, that money can grow tax-free. And when I take that money out later in those days, guess what? All that money is mine. No taxes to worry about whatsoever. That's pretty cool. And by the way, I'm just talking about $200. Imagine if you invested more. Imagine, for example, if you also invested a large lump sum, like when you get your tax return, instead of putting that money towards a TV or technology or like a trip or vacation or this or that, you put that money, for example, in your investment account. Now, the question is, Tommy, okay, you made some mistakes. You would have done this. You would have done that. But what exactly would you have invested your money into? The answer is, I would have invested my money into the S&P 500. Whether in ETF form, which is basically an exchange traded fund that's traded on the market, or whether, for example, in index fund form, which is basically an index fund is just another type of mutual fund, okay? Whatever you want to do is fine, but usually I did ETFs because ETFs you can start investing with $1, while index funds you usually need a minimum of like $3,000, like if you do Vanguard, but you can waive that if you are doing it, for example, in a retirement account. So if you open up a Roth IRA, you can start investing into an index fund with like little to no money, okay? So that's going to be awesome, and it's fine. Either one is fine, as long as you're in it for the long term. Now, what do you think would have happened though, okay? If I had just, for example, invested that $10,000 into VOO, the S&P 500, the answer is I would have had a lot more money today. Again, that was about 8 years ago, a long time ago. And back then, well, that investment used to cost about $171. Again, this was a long time ago. This is VOO right here. This was basically back in like 2016, I would say. So let's say like it was like $176, okay? Do you know how much money that is? Okay, let me just grab my phone here if I can actually find it. Yep, here it is. I have $10,000. I'm going to invest that into VOO. Again, VOO at the time was basically like $176. So divided by $176, that's going to be about 56 shares. Today, do you know exactly how much this stock is basically trading for? The answer is a lot more than $176. Right now, it's selling for about $516. So again, those same 56 shares I would have bought at 176 would have been worth right now $516. That would have been worth about $29,318. And guess what? To me, that is a lot of money. And that's just basically me buying it and sitting on it. And in less than 10 years, I almost basically triple my money. Again, when it comes to investing, investing is simple. The hard part is to actually invest, okay? To actually pick the right investment, to actually continue investing into it, and to just basically wait. You're not going to get rich over the short term. Usually that doesn't work. And by the way, you know why I use figures like waiting 40 years, waiting 30 years? The answer is the average millionaire is usually like in their 50s, like 53, 55, 57. They're usually in their 50s and they're first time millionaires in their generation. They didn't inherit anything. And the average person watching my videos is usually like in their 20s or 30s. So the answer is if you're watching my video and you are in your 20s and 30s, usually just like me, we used to think about, hey, in the next 10 years, how can I become a millionaire? The answer is it's probably going to take a lot longer than that. And if there's just one more tip I could give you, when it comes to getting wealthy, it's not just going to be in the money you invest, but it's also going to be in the money you spend. The less money you need, well, the less money you're also going to need invested. That's why today I'm financially free, but a big part of that is because I have no debt, I have a fully funded emergency account, I can buy a home in cash, not for $500,000, not for $300K, like a normal house for like $100K, $180,000, basically it. And I'm good to go, I'm solid. And guess what? Because of those things, I can say I'm financially free. But if I was like the average person, I want to be in a bunch of debt. I don't want to have, for example, a safety net. And I also want to buy a $500,000 house. There's no way I can be financially free, okay? It's going to take me decades. I'm going to need a bunch of money invested, okay? So that's the idea. You can basically become financially free by investing that like 10-15%, but also trying to pay off your house so that way you need less money. Thanks for watching, guys. See you guys next time. Long-term team out. Do me a favor, subscribe to the channel. It helps a lot, and peace.